It's Tuesday the 14th. Big day today, US CPI. Now, I don't normally talk too much about economics or fundamentals. I normally dive straight into my technical analysis, but over the last week, it's been absolutely crazy. Last Wednesday, we had Fed Chairman Powell's testimony in which he indicated that interest rates would go higher and stay higher for longer, which has been a fairly consistent message over the last year, with inflation obviously rocketing up. And although it's eased back, it's been fairly sticky around the 6.5% area. Then on Thursday, we had the bank collapse. No one saw that coming, and that has dominated events ever since. Fed bailout of the depositors yesterday. Markets have just been wild. There's no way that anyone could have predicted the moves. Generally speaking, we've seen a lower dollar, stock markets all over the place, gold through the roof as a safe haven, and silver following now, having broken high. We'll have a look at that in a minute. So today's CPI number is probably more important than normal because we've had an insane reaction where suddenly the market thinks that the Fed will not raise rates again because it's just too risky for the banking system. So bond yields have collapsed. I think that the market is expecting no interest rate hike at the March meeting, or at the absolute most, 0.25%. So, of course, if CPI takes off today, it's higher than expected. What does that mean? Does it mean the Fed will be forced into a 0.5% rate hike? Will the stock markets collapse because worries over the banking system? As you can see, I've got this news article up from CNBC. We're looking for a 0.4% rise in February CPI, 6% annual pace. That's compared to increases of 0.5% and 6.4% respectively in January. So a number higher than 6% will be very interesting indeed to see what that does to interest rate. I can't really believe that the market thinks that because of banking collapse that the Fed will now no longer raise rates. Makes no sense to me at all. They have to fight inflation. That is the number one thing that the Fed has to do. That is their mandate. It's not to go around saving banks and tech companies from bankruptcy. Anyway, these markets make less and less sense the longer I trade them. Okay, so we're looking at the US dollar index. It's clearly pulled back. Not easy to read some of these markets these days. This is a 4-hour chart. We should have had good support around the 104 area. We've broken below it. On the 4-hour chart, that's the 500 period moving average. So this uptrend has now been broken. The uptrend that I really thought was going to last, because we really did have some decent bullish signals, but really, no matter where you draw your trend line, that uptrend has been broken. And so for the time being, we remain in a bear trend since September of last year. This has just been a bear flag in that bear trend. Of course, in the longer term, we are in a bull trend. But right now, this is where my focus has to be. Now, of course, all this could change with the strong CPI number, and the dollar index could be trading above 104.5, which would certainly look more positive going forward. But as long as we hold below sort of 103.80 in the dollar index, that's going to look quite negative. Gold is through the roof. It's up $100 from the low of 18.11 at the end of last week. And silver took a long time to catch up. Silver actually had really strong resistance level around this $21 area. We did pause around here for quite a long time, just below here, as you can see from these candles. Anyway, eventually we broke up. It really didn't look like silver was going to break up, but when it did, of course, we really rocketed. How many stop loss orders must there have been above that trend line, fib area, and 100 period moving average on the 4-hour chart? A lot, because the price really did rocket. Now, it looks pretty good for silver. We should be able to play catch up with gold. We could be going to sort of 22.20, 22.5. Good support down there at 21.00 if the market does retrace, but it doesn't look like it's going to do that at the moment. And try and show you some Forex pairs that are making sense. A lot of them are not, but the Aussie dollar certainly does have good resistance around the 67.00, 67.20 area, and that short did work there yesterday. New Zealand dollar versus US dollar, that broke higher as well, hit the 38.2% fib and is retracing to what should be good support around 61.90. I have to mention the euro US dollar, obviously two very big currencies, but really nothing going on. We're just trading sideways, and I can't really see any decent trading opportunities in that pair. Obviously, the movement in the euro versus the US dollar today will be entirely dependent on the CPI number, unless we have another bank go under today. Let me show you what I call my trade sheet, something that I give to my subscribers every morning. So I'm just going to show you this for today. I've got some levels on there. New Zealand dollar got a sell level. CAD yen, I've got a buy level there. US dollar yen. Now, these dollar pairs, obviously, you've got to be careful with, because if we get a wildly out of line CPI number, they're not going to be massively relevant. Quick look at stock markets. The DAX finally broke lower. We were trading in this really awkward sideways trend since the middle of January. So now that we've finally broken down, we've hit the 500 period moving average on the 4-hour chart. We've got fib support around 14,800. 14,850 down to 14,800 is a good support area today. Certainly has held so far. Break below 14,750 would be a sell signal, and then we would plunge further in the DAX. Interesting how the FTSE has been absolutely clobbered, especially compared to the DAX, even compared to the Nasdaq. FTSE has been really battered. We've hit the 38.2% fib support level at around 75.20, and it is holding. I don't really think that's a very strong support level, and I wouldn't be surprised to see further losses in the FTSE. It's really quite odd that the Nasdaq has not been hit hard when you consider that so many Silicon Valley tech companies had their money deposited at the bank. The Nasdaq, as you can see, should have good support around 11,600, which is a trend line going back to September. 61.8% fib. That really will be key for the week. A break below 11,500 would be a sell signal for the Nasdaq. We've been going sideways for such a long time now. Really, we've been going sideways for almost a year when you look at that chart. You think we're in a bear market, but then you open it up a bit and we're just in a big sideways trend. Okay, that's it for me today. We'll chat again soon.